Hi traders, it's Eddie here from TradeView. Welcome to episode number 31 of Trading Talk. In this episode we're going to try something a little bit different, and backed by popular demand is Max from Townsville, who did a trader profile for us a couple of months ago. Max has taken one of the models that we've built in this Trading Talk series and he's made it his own, and he's going to show you what he's done to it and some of the great results that he's been able to get. So I hope you really enjoy this one from Max. He's doing a fantastic job, and if you like them we might actually get him to share some more of his ideas, because he's got some really good ideas and we're helping him to develop them further the same way we can with all of you guys, so just need to ask. Again, hope you enjoy this video. Until next week, all the best with your trading.
Hi guys, my name is Max Sainty. Some of you may have seen me a few weeks ago on a trader profile video done by TradeView Investments from Melbourne. Today what I'm going to do is I've been asked if I can show you a system that I put together which was based on a series of videos that Trader Talk videos that Eddie did. There were episodes 22, 23, 24 and 26 I believe. So what this was about looking for a chart pattern. So what I did was I've taken the basic concept from those videos and I've put in, so we looked for, and what we were doing was looking for a pop and a standard deviation. So what I've done is I've made it so once we get the pop, we then have a period to allow for consolidation in the market, and then after that we have another period where we look for the price to break out either above the highest high or below the lowest low from the consolidation, and we'll trade in the direction of the breakout. We place our stop loss on the opposite side of the consolidation, so if we take a long trade, our stop loss is at the lowest low of the consolidation, and vice versa for a short trade. The profit target for the trade is set at a multiple of the bar that we actually enter the trade on. So what I'm going to do is I'm going to show you my chart where I got the idea. So here we have a pound US dollar chart with the standard deviation indicator set at the bottom here, and we set a lower level for the standard deviation and an upper level, and what we're looking for is we're looking for the price to pop up go from below the lower level to pop up above the upper level and then reach an inflection point, which as you can see we've got here. And once we've hit that inflection, we will then set a time period to wait for the consolidation to happen, and then another time period for the price to pop out above or below. So the way we did this, after speaking with Todd and Tim at the support desk, who were very helpful and gave me a lot of ideas and assistance with this is how we did it. So as you can see, here's our pop. So I've divided the system into zones, which I found was very helpful to allow me to picture what I actually wanted to happen. So zone 1 is the first step where we step above the lower level and get above the higher level. And we integrated zone 1 and 2 because the whole lot, then we have to come up and we have to make our inflection, which is here. And all of this has to happen within a period of a number of bars. So I've made the number of bars as a variable, which I will show you when I show you my system, so that can be optimized, you can adjust it. So we now have our inflection where the standard deviation has come up, it's formed a peak, and it's gone back down. Then we set another zone, and all of these are controlled by a counter, and the counter was shown in the videos that Eddie did. So if you want to see how to do the counter, just go back and watch those videos. So we set a counter for X number of bars to allow for consolidation. Once they are finished, then we set the counter back to 0, and then we're in zone 4. So we set the counter again to the number of bars that we want for zone 4, and we wait for it to pop out. So as you can see in this example, the consolidation actually took quite a long time before we got the pop. So depending on what your counter was set at, you would have either had a trade or it would have been a no trade, and you would have gone back to waiting for another pop, which you can see further along the chart we've got here. So what I'm going to do now is I'll show you my system, which I put together using EA Lab. And basically all of this first part here is all directly taken from the videos that Eddie did. So the only thing I've done different is I've set my breakout for a long trade and the breakout for a short trade. And it's just the highest high of a set number of periods that we look back for, and the lowest low for a set number of periods that we look back. And in the next part we have here, I'll just make it a bit bigger. So then we set if the breakout's true. So if we have a breakout and we have no trades long, and then we have a close above the breakout level. Now here's where I've set my profit target. So my profit target is set the close of the bar that actually caused the trade to happen, and we have a three times the ATR, which is just set at 1. So that will give you the range of the candle that's caused the breakout. But again, we can make this a multiple, so we can change all of this. So we can change how much we multiply it by, or we can make a variable, so we can change the number of periods in the ATR, so it can be a 4, 5, whatever we want. We take our trade. Once we've entered the trade, we just set everything back to false, so it'll just start looking for our conditions again. So this is where I got to doing it and making the system, and for me it wasn't quite right. So I got hold of, up here where we can ask for help from the support team, and I sent in a request along with a description of what I wanted. I had a screenshot of my chart set up so that Todd could see what I wanted, and this is when Todd came up with the idea of the zones, and also helped me to make it look a lot tidier. What we did was, so we set up our zones here, and we put them all in. We made functions out of them, so it's a lot easier to work on. So we just have to expand it. And zone 1, so this is our first step where we're looking for the standard deviation to 2 periods ago was below the lower level, and then it's crossed, so we've had a cross above the lower level, and then we go into our next zone, which is here. So this is where the counter that we got from Eddie's videos comes in. We set our counter, we set our number of bars, or the time period that we're going to allow it to last for, and now what we're looking for is we're looking for the standard deviation within the number of bars that our counter is set for to cross above the upper level that we've set. Once that happens, we can go on to the next zone, and we reset the counter to 0. So we'll just get these out of the way. So now what we've got here is, again, once we've reached this zone, so we're now in zone 2, we set our counter to count +1. We set the number of bars that we want to wait, and this is where we're looking for the inflection point. Now the inflection point is that point at which the standard deviation has made its high and it's started to come back down again. So as soon as we get a lower count on the standard deviation than what we had on the previous bar, well then we've made our inflection, and we're looking for the next zone. So this puts us into zone 3. And here in zone 3, again we reset our counter. So we set it to however many bars we want to wait for the consolidation to happen. Once that's happened, we've gone to zone 4, and what we're doing is we're setting the highest high and the lowest low of the consolidation box, and those are the areas where we want to take our trade. So here we go into zone 4. Sorry about this. Expand, that's what we want. And this is the actual area where we take the trades. So once again, we've entered zone 4, we set our counter to the number of bars that we want to wait. And now what we're looking for is for a bar to close above the highest, which is the upper level of the consolidation. We're setting our profit target here. And then if it closes below the lower level, once again we set the profit target, enter the trade, and now we've set everything's gone back to zero, so we're in the trade, we're waiting to see what happens, and we're also waiting for another inflection, which as you can see on the charts, it happens all the time. There's you can see we've got one here, and if we just follow this chart, and this is just one chart, and we can go onto all of the charts, and you'll see these things happening probably at least 3 or 4 times a week. Mostly, I notice mostly we get them around the news releases, so things like non-farm payrolls from America, if the Fed chair speaks, we'll get Reserve Bank governor in Australia, unemployment figures, interest rate releases, all of those sort of things will cause spikes. As you can see, here's one here, big spike down, then we get the consolidation, and then we've moved away again. So just another example of where the system will do something. Now I've got to the stage with this where I've actually put together a portfolio of products which I am now currently trading on a demo account, but I have noticed that what's lacking is I haven't got any trailing stops, and it seems quite often it can break out, not quite reach its profit target, it comes back and then it goes the opposite direction and gets stopped out. So I've actually got another one that I've added trailing stops to, which I'm currently testing, and in a couple of weeks I'll be able to show you the results of that and what it would look like in a portfolio and have it trading on a demonstration account. So that's what I've been doing with the videos that Eddie puts out, which I find very, very helpful. There's a lot of good ideas in them, and yeah, thank you very much.